Well, how ironic it is that the New York market should be closed on Monday, the day of the inauguration. It wasn't closed because of that. It was closed because it's Martin Luther King Jr. Day, an annual holiday here in the United States. Of course, these markets are coming off the back of a very, very strong 2024 with gains, depending on which market you're looking at, of between 14 and more than 30%, and the S&P 500, the broad market, rising by well over 20%, in fact more like 25% for the second year in a row. And as you know, the incoming president, Donald Trump, puts a lot of store in these stock markets. He sees it as a valuable way of showing how wealth is improving in the country. But it's worth pointing out, I think, that stocks are not the economy and the economy are not stocks. And there is an unspoken rule about American politics which says that the incoming president, in this case Donald Trump, inherits the economy of the outgoing president, in this case Joe Biden, and that can persist for 6 months to a year. And Biden is handing on very strong jobs growth, very strong consumer sentiment, and lowering inflation, massively down from where it was a couple of years ago to well below 3%, getting close to 2%. Now, Biden's legacy, therefore, on the economic front is very healthy, but the folks on the ground are not feeling it. And this was one of the problems that he faced in the election last November. The price of eggs and butter and bread and milk is all elevated. Now, the economy, that means, is for President Trump to either improve or to keep the same, or even potentially to lose. The problem everybody faces now on Wall Street is what will happen regarding tariffs, deregulation, and tax cuts. What will he do? And how far will he go? I think it helped a lot that he had a conversation last week with President Xi on the telephone from China, we're told at Trump's behest, in which the two men promised to work together to make the world a better and safer place. The strong rally in stocks that we've seen here since the election are because a businessman is returning to the White House and the Congress is going to be a sort of business-friendly Congress. That's why the stocks rose after the election, although they did dip around the turn of the year. The best example, I think, of all of this and the anticipation of what Trump may do for the economy is Bitcoin. A couple of years ago, Bitcoin was flirting with $20,000 per token, and after the election of Trump, and since then, it's been flirting with $100,000 per token, and on Friday it was $104,000, and that's a 2025 high. Economists think that 2025 as a whole could be quite a volatile year. Everything that the new administration does that is good will be rewarded with a boost, and everything that they do wrong, or which Wall Street doesn't like, is likely to be rewarded with a sell-off. But the really big issue, the issue that overarches everything for Wall Street as the new president goes back into the Oval Office, is tariffs. If the tariffs are aggressive on Canada, Mexico, the European Union, and most especially China, then the instinct will be to sell off. Nonetheless, those same economists think that the possibility of the S&P 500, the broad market, actually closing above 20% again for the third year in a row is not without possibility. Only time will tell. John Terrett, CGTN, on the trading floor of the New York Stock Exchange.